Information presented on Sky News Real Estate is general in nature. Viewers should seek their own professional advice before purchasing products or services. Sky News Real Estate may receive a fee for commercial arrangements with companies featured in this programming. Sky News Real Estate. Smart Investing.
Hello and welcome to Smart Investing. I'm Chris Gray. On tonight's show, is it still possible to get a 95% interest-only loan for buying an investment property? Has APRA's lending restrictions on the big four banks led to smaller, more adaptable financiers to enter the market? And can we believe the auction clearance numbers, or is there a difference between what's actually published and what's really happening? Well, all that and more over the next 30 minutes. Well, joining us tonight is John Mansamelli from Hunterwood Solutions, and we've got Charles Tarbey, Chairman and owner of 2021 Australasia. Good to see you guys as always.
Thank you.
Now, in any industry, we've always got these acronyms all the time, and going into broking, I keep seeing these MFAA and FBAA. I've never heard of the FBAA. Do you want to explain what those mean? And should we really care?
Well, MFAA, Mortgage Finance Association of Australia, and FBAA, Finance Brokering Association of Australia. Wow. Very simple.
So the next question, should we care?
Well, yeah, maybe I should. Maybe not so much. Well, look, for consumers, yes, because it means that a broker has joined some sort of industry body, a bit like a CPA, accountant type industry association. So if you want to become a mortgage broker, there's a code of ethics, there's some training, there's CPD points that you're going to need to get to continue practicing. So. Yeah. I think it's a great idea. It means that you've got a continuous up-to-date training and education. And for consumers, it means that you're getting a better deal because you're dealing with a professional.
And Charles, I guess the same question could be for the Real Estate Institute, because a lot of these industry bodies, a lot of sceptics will say, well, the industry body's actually looking after the agents, not after the consumers. Can that be the case?
Yeah, it's very hard.
And are we allowed to tell it
well,
like it is?
You know, it's a very difficult road. Even with my organisation, people complain, you know, about various things. We all make mistakes, and I've got to go in and try and deal with it. But the best I can do is adjudicate to a certain point. I can't take action against a manager or an employee unless they're proven guilty. So I've got to try and manage that process, and I care about the way the brand's perceived. So obviously I do my very best, and I think the Institute are in the same position. They'll do what they can, but there's a point until it becomes legal that nobody can really do a great deal at all.
So at least for both of these cases, at least you've got someone that will try and adjudicate, which
you've
is
got a
than
chance,
nothing.
because if it's somebody that doesn't belong to, and you really don't have anywhere to go. You know, you can go to Consumer Affairs or whatever it's called in each part of Australia, but even that's a process that often is not picked up. If somebody wants to protect their brand, that's probably more important, that integrity of that brand, whether it's the Institute or whether it's your business, John, or my business. That's really vital to me.
And again, if you're choosing between two agents or two brokers, well, you may as well, if they're both equal, then you may as well go with the one that's got the accreditations anyway.
No, I mean, the lenders also are saying that you've got to have some sort of accreditation with either body, otherwise you can't practice.
Yeah.
So it's almost impossible to become a mortgage broker nowadays.
Now, I gather the MFAA released a report fairly recently to talk about it. Do you want to come up with some of the highlights?
Yeah, so there was some interesting data that came out, Chris, I'll share with the viewers. Interesting that mortgage brokering has 16,000 mortgage brokers in the country. So what it means for the viewers is there's one mortgage broker for 1,500 people now. So they're all striving to deliver better outcomes. Brokers are also causing more competition, and what the industry has seen is that the market share for the big four banks is actually dropping. So we can see here 59% market share in 2015, it's dropped to 53% in 2017. So what's actually happening now is the brokers are getting around these APRA regulations and starting to use other lenders that possibly weren't being used in the past.
And probably one thing to pick up on that is a lot of people, Charles, think that I've got to go with a recognised name, but it isn't in reverse. Is if you're giving your money to someone else, that's when you want the recognised name. But if you're borrowing their money, who cares whose money it is?
Well, I guess so, Chris. Well, you're speaking from experience at the end of the day. But, you know, mortgage brokers have become an absolutely critical part of any real estate transaction nowadays compared to when they had to fight for space years ago. So there's a lot changed in there. You know, there's more to come. There's a lot more coming.
they're driving innovation as well. There's white label products. I can see in the report that they're driving. There's a lot more white label products. There's more innovation coming through.
The accessibility too is a big thing, as you're saying. And if you look at everywhere you turn now, there are lots of different organisations that are giving you an online experience to the point where you're not really talking to anybody.
So many distribution channels to get finance. Correct. And look, the end result was mortgage brokers are now 53% of the industry of lending origination. So. So mortgage brokers are now the main source for all lenders to distribute.
They tried to push that back at one stage. If you go back maybe a year and a half ago, they wanted to reduce the margins they were paying brokers, and it made it less. To be a broker, it became a difficult thing. But then I think the banks worked out that it's far more expensive to actually operate people internally than it is to have brokers. So they changed the rules once again and brought it back, just like they're doing with investor loans right now.
Yeah. Now, a final point is the government's conducting a review of the mortgage industry. Is that something that consumers should be worried about? Do they have to worry about brokers?
No, it's a good thing. I mean, I think it's part of this broader landscape that the government is doing across the financial services sector. They're saying that mortgage brokers are a bigger part of the investment property landscape, and so, the broader lending landscape, and so they're saying, look, let's review this channel. More and more consumers are using it, and the good news is, what they have found has been relatively good. They're saying, look, consumers are voting with their feet. 53% of all lending's going to mortgage brokers, you know. And there's a couple of little suggestions that they're saying at the periphery of the industry, but on the whole, there's been a bit of a tick of approval. The report hasn't really been handed down, but the interim report is saying, yeah, look, mortgage brokers seem to be doing a good job. Yeah,
and generally more competition generally helps most industries.
Yeah.
So it should be good. OK, Charles, let's jump to your numbers and see what's happening. We're kind of pretty well into the heart of the 2018 now.
We are. Some of the areas, such as Melbourne, had a very quiet week. I think it might be the Moomba Festival. I'm not sure that has an impact on it. But you mentioned earlier the auction numbers the same as what they are really purported to be. So that's what's happening. And I guess when you start on a weekend and you work your way through the week and more are reported, the change kicks in. And generally, it's in the negative. So the clearance rates for this week weren't too bad at all, 65.3%. I'm sorry, 67.3% compared to this time last year, which was 75.1%. So still, a little bit different, 10% roughly different. Sydney and Melbourne markets are the ones that probably struggled the most. Sydney was 66.6%, but they had 936 auctions. So Melbourne only recorded 447 auctions. And they're usually well over 1,000, so I think it might have something to do with the festival in Melbourne. And the clearance rate for Melbourne was 72.7. It's respectable, but no capital city other than Canberra and Adelaide recorded better than this time last year. So the number one was actually Canberra at 77% for clearance rates, and they had a good number of properties as well.
Now, we talked about different segments of the market doing different things. Some might be at 100, some might be at 50, and that gives you the balance of 75. Does anyone ever break down where those clearance rates are, or is there just such a small amount of data that it's too hard to do that?
Yeah, it's very hard to do because you're relying very much on agents reporting and you're relying on people like CoreLogic. They're phoning people, they're pushing people, same as the various domains, their domain sites they're pushing to get data. So they don't get all the data, but I guess at the end of the day, what we're trying to achieve is an average of some sort. If we saw clearance rates, coming in the 45s and 50s on a national basis, you sort of know the market's struggling. But when it's sitting at where it is now in the mid to high 60s, that's still a very good clearance rate. Yeah, capital cities in the mainstream did very, very well. Even Brisbane, they've got a really steady clearance rate going and have had for week on week now. So we are seeing a pattern. The pattern is lower. It's not as increased activity, but there's still a good solid market out there.
Wonderful. And what's happening with the homes advertised for sale?
Yeah, they've increased every week for the last few weeks. Now, they died a little bit last week, 0.4% increase over the week before. And last week we had over 8% better than this time last year. At today's figures is 4.65% better than this time last year. So it's still up, but again, up, buyers down, overseas money lower. So there's a whole lot of factors now that are kicking in to make it even harder for people who are selling. I know a lot of agents having open for inspections, people are not coming through.
And also, do you get to find that because people are seeing the clearance rates are coming down, their buyers are getting overly fussy, that suddenly 6 months ago they were happy with an 8 out of 10, now they want 12 out of 10 and they're never going to find it, so they're still going to procrastinate.
They are. But look, Chris, the best real estate agents, the ones that know what they're doing, the ones that drive the open for inspections effectively, the ones that price their properties with their sellers effectively, they're actually not affected by the change. It's the agents that really don't know what they're doing. They're the ones that are struggling at open for inspections and so on.
Overquoted and
yeah, they went in and bought the listing, as we say in the industry, and really didn't work it better from there.
Sure. And what's happening with the rents?
Up 1.61 again percent over this time last week. Best performing capital city has been Hobart for quite some time. I think it's that halo effect. 10.47% increase over that period of time. Perth came in at a 0.71% increase. I'm pretty excited about that because, as you know, Perth has had a very, very long battle for some time. So it's recovering. The vacancy rates here, which we'll talk about in a sec, they've been hovering as well. So I think we've got to watch Perth very closely because I think there's still a great deal of opportunity coming that way.
Wonderful. And finally, the vacancy rates.
Yeah, pretty good. Melbourne, 1.22. Wow, you know. Sydney dropped again, 1.64, which is really good. But Perth jumped up to 7.66 after a high 6s last week. So that's 3.51% over those three capital cities.
Now, John, for the last 3 or 4 years, the brokers have had it tough. They've been trying to get people pre-approved. They haven't been able to find properties. Is it getting easier for the brokers now that the clearance rates are down and hopefully, as Charles said, there should be more properties up there?
Look, it comes down to basic serviceability. You know, the banks just want to know, can you service a loan? You know, the banks have got APRA breathing down their neck. But there are good news. Like, you know, I was talking earlier this year, I'm seeing a thawing of the market. So it's coming down to the lender that you're choosing. And
sorry, I was thinking it was more about buyers finding it easier if they have got approved
to
actually then get out in the market and buy properties.
Absolutely, they've got choice. They don't have to rush as much as they did. So, yeah, our feedback that we're getting is that they're able to take their time. They weren't really rushing like they were. So, I mean, they still need to move. Yeah. But, you know, it's a bit more of a balanced environment where they're being judicious with their time, but they're also at the same time really being able to go, OK, this looks good, I can look at this one.
And that's the market you love, isn't it, Charles?
I do.
A nice balanced market.
This is where it is, right now.
Sounds good. Well, thanks for joining us again, Charles.
Thank you.
Well, coming up, the state of the 95% interest-only loan market. And a reminder, you can get a free digital copy of my book, The Effortless Empire. You just need to go to yourempire.com.au, just enter your email address and you'll get it straight away. Now, we're going to take a short break. We'll be back soon.
You're watching Sky News Real Estate. Smart investing.